Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments into the chat room for me to answer at a later date. Okay, so we have ourselves a little bit of a rocky market. Pretty sure everybody who's been following along might have expected that by now. So lots happening on that front. I would say that we've had a rapid shift in trade focus where now we're not talking about Chinese trade anymore. It was the Japanese trade was on the weekend, Europe trade, and now we're talking about getting the USCAM trade agreement signed. So with all of that going on, trade is still front burner, but it might not be China trade. The market has been responding, I'll say, to the warnings from the bond market over the last few days. And now we're going to sit here and watch very closely because, as an example, one of the things today that's going on is most of the top performing stocks in the NASDAQ 100 are all semiconductors, which is a bit of a surprise. So just keep watching this market. It's pretty rocky, but we'll keep following it for clues. So, we talked last week about setting up utility and safety trades, and I mentioned that the problem with downsloping markets is even if you outperform, it might still be falling. So the issue that we need to find is absolute returns, and one of the things that comes up when we're investors, obviously, is the TV will promote what's working this morning kind of thing, and so the problem is you're almost trading on what worked yesterday and not really where we kind of expect this market to go. So we're going to talk a little bit about rare earth metals and gold, and one of the reasons we're going to talk about that is gold is typically a defensive trade, and I'm not that bullish. I still think it's hard to outperform absolute with gold. So as an example, in 2011, gold fell from something like 1150 to 650. And for a period of time, at the early part of the downfall, gold was outperforming, oil was outperforming. So there's a whole bunch of things outperforming. But in the meantime, the stocks related to those fell away. And so we're going to talk about just, So to me, one of the things I like to do is just move to cash. Now, other people are trying to find dividend investing, and I fully get that. The point that was made yesterday was that, that dividends are sitting there with a 19x on earnings. And so 19 times earnings for defensive stock is quite a bit. Normally, that might be some level that you pay more towards a growthier name. And lastly, Goose droppings off the golf course. Canada Goose is a retailer that's been in the news quite a bit for they make high-end jackets and that kind of thing. But the bigger issue with this, quote, high-end jacket is that one of their big opportunities was in China. And so even though they reported pretty good numbers, the stock fell off a lot. So this might be a stock that's better suited to put on the radar for a recovery in China's trade, not trying to beat it. So anyway, we got lots to cover off. Let's get there. First of all, on Tom and Aaron's show this afternoon, we have Larry Williams coming in, and I first met Larry at a CMT Association meeting in New York, and he spoke to the crowd. Now, Larry is a brilliant man. He was part of the group that set up full stochastics, slow and fast stochastics. He created his percent R. There's a lot of different trading information that Larry has looked at. He's traded for more than 50 years. Brilliant man. Anyway, on the show this afternoon, 12 noon Eastern, he's a wonderful speaker, very funny man, really great storyteller, excellent trader, lots to learn there. So anyway, Larry Williams from ireallytrade.com will be on Market Watchers at noon. So one of the things that I wanted to cover off today, just when we get a market set up like this and everything's breaking down, we just need to know where to look. And as an example, I've got tabs set up. So this is a chart list. Let me do it the other way. Function. So this is a chart list for all the Toronto Stock Exchange stocks. And again, they have a lot in Canada. We have a lot of metals and mining stocks. So it's an important place if you want to look to go into gold or precious metals or other types of materials, that this would be one of the chart lists that you would look at. And you can see that not much is moving up, even though the overall market isn't down that hard. We're down, less than 1%. But the big issue is we've got, just very quickly the table goes to no gains, and farther down it quickly drops into negative. So when we have the S&P 500, we want to do that same thing. And one of the things to notice here is, this is a semiconductor stock, and we can just look at them here, trying to bounce off these lows. Here's Intel trying to bounce off these lows, and that's a meaningful low. That's down by the November, December lows, or October, November, December lows. Another one in here that I saw was Microchip Technology. So all of these are starting to bounce, and I'm a little bit surprised by that. So having those stocks bounce while we're in a down cycle, or it looks to me like we're going to break down, is a surprise to me, because normally tech, I would be surprised to see it outperform. Anyway, that's what it's trying to do. So in the list of bouncers, and again, they're not going up by much, they're going up by 1%, not 6% or something like that. But I'm surprised at how many semiconductors are on the top of the list. And here's Texas Instruments, and here's Skyworks. So as we look through all of these, just continuing to look down this list, here's Micron Technologies. Lots of them are testing their lows here. But again, it's not the group that I expect to bounce, so I'm a little puzzled by why it might be. Commercial vehicles, Caterpillar, seeing it holding up is really a surprise, because it's one of the biggest users of steel. Steel costs are going up if the tariffs are in, so that would be harder to figure out. So as the market tries to settle out here, it's interesting to see where there's some support holding up. Now, let me just, if I do a Command F, you can see up in the top right-hand corner here, I'm putting in the word Apple. And Apple is trading flat today. So even though the overall market was trying to pull back, Apple is trying to buck the trend. So that's pretty good news. Now, if we go all the way down to the bottom, just close this and go down to the bottom of the page, what we want to look at here at the bottom is what's not working. And you can see Michael Kors getting smoked from another retailer. And probably the biggest issue with this is sales in Asia would probably be under pressure. So, and I mentioned Coty the other day, C-O-T-Y, in one of my blogs, and they have a lot of makeup, but they also have Gucci and things like that. So it's going to be interesting to see if that stock can actually outperform. And just looking through this list here, what is really underperforming, and I would expect it to be these apparel retailers and stuff like that, probably because most of them have to change their supply lines and that kind of thing if they're going to keep going. Signet Jewelers, this one just seems in trouble. Retail REIT, that one doesn't look very good. Anyway, as I look through this list, energy's obviously been getting smoked. It's oil continues to fall. Hopefully, we've made sure that you're aware of that trend and you're cautious around it. Now, here's Ulta Beauty, and it's one of the areas that I thought might have held up. Again, makeup and I'll call it consumer items, but it even seems like it's rolling over. So no real help there. But again, what we don't see at the bottom of this list, which I might have expected more of, was more technology getting sold off and more semiconductors getting sold off. And they're not at the bottom of the list. So that suggests to me that somebody thinks that we can bounce in here. My bond charts, obviously, that I shared the other day, don't support that. And I think from Twitter, one of the things that I keep looking at is the the automotive chart, and obviously Tesla's been falling recently, but the Tesla was one of the names that was up today, so maybe it was an oversold. All of the things getting beaten down actually tried to bounce today. But the bigger issue that we have is, in general, the auto chart, the long-term auto chart looks really, really weak. And so keeping track of these sectors as they're breaking down, I think, is pretty important. I still don't see any real support in the steel sector and that kind of thing. So I would be cautious there. Now, rare earth metals, we didn't see that on the top of the list. We didn't see any metal miners showing up there. So those aren't that helpful. Now, this is the NASDAQ 100 instead of the S&P 500, and we'll just go to the top of the list. But this was literally, look at 1, 2, 3, 4, 5, 6. Sorry, and I missed that one. 7, 8, 9, 10. So in the top 20, semiconductors are the number one group. Very surprising to me. So keep watching here. It's shifting sand, and one of the concerns I have is I actually expect the market to break down hard. I think we finished Friday down lower than we are today, but I think on a big picture, and maybe we should go there now, is what are the indexes doing? And let's just update them to real time. So this is a side-by-side view from gallery view. So up here in the top, you would pick gallery view, and then you would put in the names. Well, I've already got them in here, but you can put in up to 2 and it'll give you this side-by-side comparison. So you can see this is just 10-minute bar charts to watch and see what the price action is. But this looks like it's been lower for a while. And if we go back, it's, we topped on the day of the Fed meeting in most cases, and we're still pulling back. We're sitting on a flat 200-day moving average, so it's not bullish, that's for sure. So we want to keep watching to see what's happening. On the bigger picture, of course, we've got lower lows and higher highs. And usually this indecision results in lower, but maybe it comes down halfway and we start to bounce out of there. Well, we'll watch the market for improvement for that to happen. Currently, that's not my expectation based on what the bond market is pointing to. So here's the New York Composite. And again, I want to reiterate, the New York Composite is not the big market. It is it's a market of stocks on the New York Stock Exchange, and the CompQ is the NASDAQ. And so what we're comparing to is all the stocks on both exchanges. The big issue, a lot of people don't think these are meaningful indicators because they don't follow the S&P 500 or the 100. I think they're more meaningful because they're early. They usually fall over earlier and help give us clues. So as we're watching the markets break down here, these charts have been telling us for a while that it was time to, get cautious and that type of thing. And from the internals, like the advanced decline line and that kind of stuff, we had drawn this red trend line here early on. We broke it pretty much May 3rd or something. And then we put in a more shallow slope that didn't hold either. But in the meantime, the market keeps breaking down, and you can see just from this moving average sentiment, we're at one of the weaker stages of the market. Now, it doesn't mean that it can't immediately bounce. I'm sure if we got some sort of good news on trade, the market would try and reverse. But I think the bigger picture is it's setting up. All of the global PMIs are slowing down. The Dallas Manufacturing Index was expected at 5% or something. Last one was 2%. Well, it came in at minus 5%. So there's a definite slowdown going on. And it's whether or not the market thinks this is just temporary or is going to start pricing in a full rebound. And the economy will continue to decline and the stock market will turn up first. So the stock market looks forward. It doesn't look backward. And I think one of the bigger things to be aware of is when the stock market changes trend, that will happen long before the economy. And right now we have a whole bunch of economists saying, everything is fine. I don't see a problem. Well, the stock market sees it the opposite way. It sees a problem and is starting to price that problem in. The other thing that usually happens as stocks don't start to follow earnings announcements or whatever is we'll hear a lot of people saying, where's the Fed to fix this market and get in here and, lower interest rates and get this economy going and all that kind of stuff. But it usually happens after we start to see the the stock market pricing in the slowdown that's coming out in the future. And of course, the Fed responds to real data, not just the stock market pricing in the data or pre-pricing the data. It's that kind of change that I think we're setting up for here. So we get a Fed meeting mid-June, even if I don't expect them to change by mid-June, but I would think that, we're heading into one of the weaker economic seasons from May to September. And if the Fed doesn't do anything till the late July meeting, early August meeting, or until they say something at maybe the Bretton Woods meeting out in the mountains in Wyoming, if we don't get anything in the June 15th meeting, and I really don't think we do, then all of a sudden we roll forward to that July period, and I think the market could sustain quite a bit of a pullback. From the net new highs data, this isn't looking very bullish. We're well below zero here. We're on the bottom side of this area now. It's paused in here before and bounced out of that. The difference is this time the bond market's also telling us that. And I think if you caught my article on the weekend, actually, let's go get that article if you didn't get it. So under articles, and you can go pick whichever ones you want here. Obviously, this is the article I wrote about the bond market. And so if you don't understand how the bond market fits into the stock market, I think this article will go a long way with some of the charts to explain what's going on. And I've covered off breadth in there and that kind of thing. Okay, so getting back to the actual stock market. So these are the two broad indicators, and then obviously we can go to the two narrow indicators, and one is the S&P 500 and the other is the NASDAQ 100. And just getting these squeezed down here. There we go. So what we want to see here, obviously, is this support level hold. But on a big picture, the point I want to make is the PPOs are below zero. So this has been going on for 2 weeks already. And, it's been, well, what are we going to do? And they could dip below zero, but it's the fact that they're getting below zero after the whole market has rallied up for 4 months. And again, the breadth that I just showed you didn't really get going over that period of time. So I think it's pretty important to be aware of the trend change and look at the volume yesterday that came in and, really showed up that selling was going to start coming in earnest. On the weekend report, I mentioned that we had, more than enough distribution days on the NASDAQ to start talking about marketing correction. So here we are with the S&P 500, and this triple top is still in place, even if these are marginally higher tops. Same thing on the NASDAQ, whether you could even just call this a double top. This one's quite a bit lower. But in general, look at our PPO signal. It's rolling over. And it's after the dip below zero. So for those that might remember, I usually suggest that once it dips below zero on a weekly chart and rallies back up, it doesn't always have to happen, but usually that's your best time to sell is on that bounce. And here's an example back in 2015. If you got out in that October timeframe, you missed the big swoosh down into low, into the January and February lows of 2016, and the market went off on a really good run. Now, we're sitting up here with a flat moving average, but the market looks to me like it wants to roll down harder. Again, the bigger issue we've got, obviously, is globally everything's on a slowdown. I saw on my Twitter feed today that Italy wanted the European Union to back its debt. Well, everybody always wants somebody else to back their debt. And so that's what makes this so hard, is once these debt levels get so high, and Japan and Italy are the two big ones, now all of a sudden they need help getting support on that. So it's not helpful that the rest of the world is weak as we go into this trade cycle, because while the U.S. economy was holding up, the main issue is it's going to slow growth elsewhere. And now all of a sudden that's starting to show up on the charts. So we can see here on the NASDAQ point and figure chart that we've made a lower low. And so so let's talk about this chart first of all. So you come down late October, and the Nasdaq bounced down, and then made a column of X's, a higher column of O's. So we're still on a sell signal because we haven't made a higher column of X's yet. This was the prior one, then this one. Right here at this moment, so late December, we make a higher high on the Nasdaq. And in early January, we still pull back more, but we make a higher high. When we broke here above this prior X, that's a buy signal. So we run up, we pull back, we run up, we pull back. We continue to make higher lows and higher highs. This is a bull market. The issue that happened today is that we have a lower low on the NASDAQ. And that lower low is indicating that we've got a sell signal. Now, if you look over here on the right-hand side, we got our first sell signal. This would have been A. So this is for October push up. And, here by this time we were in B is November. So when we made this lower low right here, that's your sell signal. And you can see that the NASDAQ was pretty weak from there. If we draw a line across to where we've broken here, slightly higher than the levels we've just broken down from, but it's the same concept. So we've now made a lower low on the tech index. And again, you could get a brief low and a bounce out of here. Something like this where you bounce up. But the bottom line is once you're on a sell signal, it should at least make you more aware to be protecting your gains and make sure that the market structure is changing if tech is no longer leading, or the NASDAQ 100 is no longer leading. Again, the S&P 500 still hasn't gone on that sell signal. It would have to get down into this 2700 level, 2703, call it 2702, because it actually has to take out this 0.72. But it has to get a little bit lower than that to take out the previous low. So this column would have to continue coming down. We're not... Again, I think the bigger issue is that the global growth is slowing, and so that this is all just coming to fruition, and we're sitting, in a very precarious spot. And the main reason is that, so this is the Head and Shoulders top. It goes from 2,800, just drawing a line at 2,800. So 2,800 to 2,950. That's roughly 150 points. That would suggest at least our target is 2,650. But I think the bigger issue we've got is on the weekly charts, and that is that this expanding wedge or indecision. So we're making higher highs and lower lows. As that happens, that's usually breaks lower. Now, again, the Fed could step in and do something. China trade deal could do something. But this is where the market is starting to get frustrated because we've spent a year here and really haven't made much of a gain. Okay. So I've covered those things off. I wanted to cover off Goose, and the reason I just wanted to go there, let's put in goose.to, and I want to put in Lulu, and actually we could do this one on the US side. But the reason that I want to cover these two off is they're a story of two different retailers. I did something wrong there. Let me just do it up here. Goose and Lulu, and change this to a gallery view. And the reason I want to point this out is, both of the stocks are going to get hit if retail slows down. And so even though Lulu is a very top performing stock, and there's a whole bunch of good things going on, selling menswear now, and things have dramatically improved, you can see this uptrend is breaking in Lulu. And in Goose, you see the same sort of thing. Even good stocks in a market pullback are going to get hit. So try and make sure you do something to preserve your gains, because the industry expression is the correlation goes to 1. So as the stock market falls, everything kind of falls together. And we saw that in the November-December period. Here's October, November, December. And Lulu, a very popular stock, ended up falling quite hard, down from 110. It rallied back up more than 50%. It was up to 180. and now it's starting to break again. So I'd be cautious. Just make sure that you've got a plan to lock in your gains and figure out some way for safety. I don't think it's a short-term issue. Again, I think you got to get 5 trade deals signed here to get things confirmed. So that would be Canada, China, Japan, Europe, and there was one more. Anyway, those are the major ones. Those have to get done. And again, there's 2 parties that have to agree to that. So until we get all of that in place, I think it's going to put pressure on global growth. Okay, lastly, let me go and just show you the gold sector. And the reason I want to show gold is because a lot of people think it'll be defensive. And, I'm not so interested in these, $2 stocks or whatever. So even if we just sort by close here and put all of the top gold performers, so this is my gold list, and put all of the higher priced names up here, you can see that they're not rallying on the news today. And so we're still not getting to the place where gold is the go-to area. The second thing that has been rallying, there's been some talk about the rare earth metals. And of course, a lot of the stuff from the electric cars have come through lithium, cobalt, there's vanadium for steel. There's a whole bunch of different types of metals that obviously would be important. But I think the important part, I've sorted it here by close, and you can see, the biggest names. Here's NEO. This is a Canadian listed stock, but it's $12.43, and it's up 3%. This Lithium Americas is one that's actually probably worth looking at. Let's just go get the chart. And the reason I want to bring these up is, these stocks have been falling pretty hard and are trying to turn up here. PPO is right at 0. So if they were to start to bounce here, this is exactly where you kind of want to step on the gas, but there's not many of them. And that is a real problem. So we want to make sure that we're in them. But again, the problem I have is that anything priced, with above $1 isn't really moving yet. And so we have a couple more names, obviously, that we could put up. Vale is an important one, and that's not the right price action. Here's BHP, trying to hold up in this range, but it looks like its top was in early April, so even before the broader market. And then Rio is out of Australia as well. That chart doesn't look great. I'm trying to hold near the lows here. Teck Resources, and lastly will be FCX. And those are kind of the big miners. But, this is trying to hold its support. Obviously, the chart high was $31. You're down to $20. So you're already 30% off the highs. And that's the real problem with these commodity stocks. When they go hard. So anyway, with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time and 7:30 a.m. Pacific Time on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or on Stock Charts TV, which has a running list of technical charting informational shows. Now, I have one more thing to remind you of, and Larry is on Stock Charts TV today at noon, so try to catch him, noon Eastern. Thanks, everybody. Bye-bye.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.